Today, I'm going to talk about how much you should expect to receive as a tax accountant when it comes to salary. Now, the salary is going to range depending on a variety of factors. One, where you're living. Someone in New York is going to be making more than somebody who is in Texas, for example, because the cost of living is so different between the two areas. It costs a lot more to live in New York than Texas, so accounting firms and companies will compensate you less when you live in these lower cost of living areas compared to the high cost of living areas. A second thing that determines how much you get paid, at least right off the bat when you join a firm, is the kind of educational background that you have yourself. Someone who has a law degree normally is going to get paid more than someone who just has a accounting degree, like a bachelor's in accounting. Also, if you become a CPA, certified public accountant, a lot of firms will give you a one-time bonus for getting that certification. So just keep that in mind. A couple $1,000s is normal for firms to give to someone once they have a CPA. Another thing that determines somebody's salary is their experience and how long they've been, at the role being a tax accountant. So first, I'm going to talk about how much you should expect to receive when you're first coming out of college, first year as a tax accountant. Based on my experience and looking at websites like LinkedIn that provide high-level estimates of how much a first-year tax associate should make, your salary is going to range anywhere between $50,000 a year and I'd say at the upper limit, $90,000. And there's such a wide range because, like I mentioned earlier, if you're living in a city like New York, you're going to get paid more off the bat. And especially if, let's say, you're a tax lawyer as well, you're going to get paid on the upper end of that spectrum. Also, if you join a certain tax group, because there's just general taxes, right? Preparing tax returns for corporations. There are specialized tax groups like mergers and acquisitions is a common one, where if you join that group, you might get a higher level of compensation. So if you join a specialty tax group, you might get a larger salary than if you were just like a general tax associate. Another thing you need to consider also is what firm you join. When you join a larger firm like a Big Four, think PwC, EY, Deloitte, KPMG, those firms are normally give you a lower salary compared to a local firm, like a firm that is regional, the West Coast, Midwest, that only operates in a certain region of the country or operates in a city. That's one reason why people out of college might join a smaller firm, is that you get more money off the bat. With larger firms, you might not get as much money coming out of college, but what attracts people is the career progression. The longer you're at a Big Four firm, you get compensated pretty well, and that's why people might start with that lower salary, but they'll get more as they progress their career at the Big Four accounting firm. But like I said, starting out the gate as a first year tax associate, you got to be making anywhere between $50,000 and $90,000 depending on where you're at and what kind of background you have and what team you join. One thing to note is when comparing salaries, there's a couple states that have salary transparency laws. States like Washington, California, Oregon, New York, Colorado. These states require companies that have job postings to give you a range of salaries that they are willing to give for that job. So if you're interested in, or if you're in those states or interested in how much salary you might get for a job, those companies should give you a range of what you might get. So just a side note, if curious to see what you would make coming out of college as a first year, I would encourage you to look on a website like LinkedIn. There'll be job postings for the states I just mentioned. There's around 7 of them, where they'll provide the salary range for that role. Once you are a tax manager, I would expect your salary to be in six figures, 100,000 plus. So a sizable increase from when you're the first year associate, you can make 50 to 80. Once you are a tax manager, which is around once you have 4 to 6 years of experience in the tax accounting field, that's when you should expect to be hopefully be a tax manager, and that's when your salary will increase significantly. It could be 100,000 to 150,000, even more depending on how many years you've been in that tax manager role. And a thing to also note here is that Big Four accounting firms, that's when, at first you might not get paid that much money when you're a first year associate. If you stick with it, you're going to get seeing a larger salary increase than you might at a other smaller accounting firm. Also, big accounting firms, like the Big Four, will normally provide a monetary bonus once you become manager, which could be, $20,000 to $30,000, which is a pretty good incentive for people to stay to get to that tax manager role. I've been talking about really salaries for someone working at an accounting firm. People will a lot of times leave accounting firms to join it. They call it industry. It's when you leave an accounting firm to join a company. Think of Microsoft, Amazon, Walmart, Google, Facebook, whatever. When you're an accountant at those companies, that's industry. And people will do that when they'll usually get a salary increase from what they're doing at their accounting firm. So when you jump from your accounting firm role to the industry role, you're gonna get a sizable increase to your salary, or at least that's the goal. But once you joined industry, like a company, it's a lot harder for you to move up a lot of times. Accounting firm is very structured where, like I said, 2 to 3 years, you keep moving up the ladder and get salary increases and more responsibilities. Sometimes when you jump onto a company, you might get stuck in that role for a longer amount of time. Another reason why, besides the initial salary increase one might leave accounting firm, is because of the work-life balance. A lot of companies will have a better balance, work-life balance, compared to accounting firms. Accounting firms, you get really busy during tax season. It could be 60, 70, 80-hour work weeks, and you don't really get that as much when you are working at a company. In summary, if you're a tax manager, I would expect your salary to range from six figures, like 100,000, all the way up to upper level hundreds of $1,000, like 180, depending on how long you've been in that tax manager role. And again, this might be even more depending on what state you're at. Like if you're in New York, you might get paid a lot more, and it depends on what group you're in and also what educational background you have. But just expect that when you're at that tax manager role, you can be making six figures. After tax manager, you could be a senior tax manager, and after that, director. In those higher level roles, a lot of your compensation is based off the performance, how much business you bring in. So the range, could be 200,000 plus when it comes to your salary. It depends on what market you're in. If you're in New York or Chicago, San Francisco, you're gonna get compensated more than if you worked at a smaller city. Just know that the salaries really start getting higher the longer you've been with the accounting firm. And once you're a senior manager, director, you could be with that accounting firm for over 10 years at that point. So 10 years of experience can give you pretty high salaries. And then finally, I'm gonna go over how much you could make as a partner. Once you make partner at an accounting firm, your salary can be as high as, millions of dollars, seven figures. It really is up to you and how much money you bring into the firm and how long you've been at the firm as a partner. Just know that when you make partner, you can make a lot of money depending on what market you're in, what kind of business you bring in yourself, and the amount of time you've been at an accounting firm. And when you're at that Big Four partner, that's when you start making a lot of money compared to a smaller firm, because you have such larger clients and you're bringing in a lot of revenue yourself. So just know that once partner, that's the highest salary you can usually make as a working in the tax accounting field. You could be a director at a large company, and you can make a good amount of money as well if you're working in an industry. Just not tax accounting, you can make a lot of money the longer you've been at a firm or company for. That concludes the video. I hope you all found it helpful for me to talk about the various salaries you might expect as a first-year tax associate, a tax manager, tax senior, senior tax manager, director, or partner. Just know that there's a lot of opportunity in the tax accounting field. You might see a lot of articles out there saying that there is a need for new accountants to join the field. There's a lot of openings and not as much people joining the tax accounting field. So there's a lot of opportunity for someone to join, to have a career in tax accounting. A lot of firms are implementing technology to help make work more efficient and allow people to work on things they weren't able to before. So the field itself, it's exciting times. We're trying to use technology. You get to work with people on a day-to-day basis. So I think tax accounting might sound boring, but I think it's an underrated job. You got to be a problem solver. You get to work with technology every year. It seems to be improving, and you get to talk to people on a daily basis like any business profession. Thanks for watching this video, and I'll see you all next video.